Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 14th. I'm going to take just a brief minute just to discuss what happened in markets last week. So we had a nice week in the S&P 500, with the S&P 500 being up 2.43% on the week. The mid-cap index, as measured by the S&P 400, was the laggard on the week, or it was still up, but not up as much as the other two indexes, up 0.63% or 63 basis points. And the small caps, as measured by the S&P 600, were up 2% even on the week. And as we head into this week, one of the things I want to talk about, kind of to wrap up what we were talking about a little bit last week, is corporate earnings. We have now received over 80% of the S&P 500's corporate earnings reports for Q2 of 2025. Of those reports that we've received, over 80% are beating their earnings or meeting expectations. We have not seen a rate this high in the last 2 years. This is the best since 2023 on an earnings beat. To give some comparison to earnings growth rates, the NASDAQ 100, which is your big cap tech names, those earnings are up 27% year over year. Why is this important? Well, we had a big sell-off in April, and we've had a lot of pundits prognosticate and worry about economic slowdown, inflation picking up, and all of these things because of tariffs and policy and things like that. But what has come to fruition is we're not seeing that have a huge material impact in the data. And what do I mean by that? Well, what's important to the market and what can allow the market to move higher, while macro headlines are incredibly important, the fundamental piece of what drives the equity market higher is earnings growth. So if we have 80% of companies that have reported, and of those 80% that have reported, 80% are beating or meeting expectations, and we're seeing double-digit growth year over year, that's going to allow a runway for a market to move higher, and you're not seeing price to earnings or PE expansion. You're seeing multiples remain the same as price increases. We got a CPI report this week, which is the Consumer Price Index, came in 1/10 lighter than expectations. Why this is important is it may give cover for the Fed to cut rates in September. This is very important, as we've had for the first time since 1992. Last month, you had 2 Fed governors or voting members dissent from the decision to hold rates steady. So 5 voted to hold rates steady, 2 voted to not. And that is the largest dissent we've seen since 1992. You pair that with a weaker than expected jobs report for the month of July, and now you have conditions where the Fed can say, I can use my dual mandate as employment is slowing down to lower rates. We are restrictive. They've said they are restrictive, and that way they can be a little less restrictive to hopefully encourage more hiring in the country. But the fundamental economic base remains very resilient and very strong. And one of the things that we're seeing here is the outperformance with these earnings year to date of the large over mid and small. And one of the things that we're identifying is if we do start to see some of these rate cuts happen, you may start to see the smaller caps outperform the large caps, as they go and borrow from banks and use that type of lending, and there can be an immediate ease of pressure and interest rate cuts that can allow for earnings growth and expansion in some of these smaller names. So if you have questions about how to navigate this time or where to look as we're heading potentially towards some rate cuts, give us a call. We'd love to talk you through this process. Expect a little more volatility as we get through here. We are heading into seasonally the weakest period where volumes are the lightest. When you have light volumes, that leads to more volatility both up and down. So if you have questions about how to navigate that volatility with the light volumes during the season, we're happy to walk you through that. You can reach us at 904-346-3460. As always, check us out online at www www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thank you so much for watching.